Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Wednesday, and we're at right now the 27th of November, 2019, just after the 3:40 time frame. Before I get too far and forget, I want to wish you all a happy Thanksgiving. Thank you, America. We should all give thanks for this free country and how good you've had it. We've all had it. If we look at the stock market, nice up. By the way, I don't know if I'm going to do one of these videos on Friday. I haven't made up my mind. Well, financial markets, a number of them are open tonight. They'll be open until noon tomorrow, and then they reopen on Thursday into Friday. For the office people, the markets are open until, some of them 10:30 in the morning, others noon. You want to check with your broker. I may come in and knock out a weekend version, but I just might not. So we'll see. It's the holiday. In any case, you can see how the market just keeps grinding to the upside. The fear of missing out, FOMO, remember that term, fear of missing out, has got this market rattled. And traders, it doesn't matter if you get a good piece of data, a bad piece of data, the market looks beyond it and just marches to the upside right now. That's pressuring the metal markets. The dollar got a bid today. Interest rates have been, if you will, in the futures, and we'll see that in a minute, rallying most of the week, and now they're seeing some profit-taking step in. And again, in the energy complex, we've had getting big builds. Today, the EIA number came out. API was yesterday. And you're just getting builds all over the place, and this with fewer rigs. I saw the Baker Hughes numbers today too, and they're down again in the rig count by 2. You haven't seen where the productions fall off. The weekly area chart of closes on the S&P. Need I say the market's at an all-time high close? What a way to go into the holiday, 3153.75. You can see how the market has just kept going up. I hate when this happens because when the correction does come, and inevitably nothing grows to the sky, I hope you realize that, it could be a quickie. You got to be careful. So you've got to play the market accordingly. Just with your stops, don't trade without them, know where you're right, know where you're wrong, know if the market breaks, what you want to buy, those type of things. I say buy because I haven't seen the long-term trend over, and I still think the Santa Claus rally is there. You've got the higher lows, the higher highs with an all-time high. You're well over the 18-day average, which has now climbed nicely above the last break low of 3097.75. In terms of the resistance, the market is stalling at the upper Bollinger Band. That is often. It's stalled like that here, but then it just went sideways a bit and made the new highs. That's why I'm saying this does not mean you're going to stall out all that much, especially now that you got a bullish embedded reading. How many days do we have of the numbers over 80? Today, yesterday, day before. It's all that matters to me. So now I've got the embedded reading. The red line, until it closes back under 80, it tells me that expect the pros to be buying in the market, looking to drive the market higher. What about the NASDAQ? Well, first let's go to the Bollinger Band. Both numbers over 80 today, not yesterday. So all you are is overbought at this time. You have an overbought market at the upper Bollinger Band. You only stay over it 5% of the time. It does not have the same picture as we just saw in the S&P. In the Dow, will you hit the upper band? You might. Again, an overbought, not embedded market. Target right through here. So we'll see if the markets are able to push it all. And in the Russell, I'd be a little cautious. You've got today over the Bollinger Band, yesterday over it. This day was at, what was that, 1623.20, and that was over the band too. So you got 3 days in a row. What I teach is that each day takes away out of the 5 percentage point when they're going consecutively, one of those percentage points. So I give the market a 2% chance for the next trading session of staying over that number. Doesn't mean it has to collapse, but I'm expecting for it to move to the right-hand side. In addition, it's very overbought. I think pros could be taking something off the table there. In the VIX, again, the market's hugging the lower band, oversold, resistance back at the 1252 area. I wouldn't be surprised if the pros who write any puts down here are looking for that as their target. In the bond market, look at how you're stuck at this 100-day average. The trend is up. You've had the higher highs, higher lows. You are overbought. You so far haven't shown any desire on the market's part to get to the upper Bollinger Band. It's a point away now. It's at 161.12. You're 160.03. 10-year note, having trouble staying over the 100-day average. Here's the difference. This market gets over it and falls back for support. 10 years finding resistance against it, and now what's happening is the Bollinger Band is going to drop down here probably to meet that 100-day average. So we're getting a better resistance idea. Any move under 129.08 ends this leg of the uptrend. A close under 129.05 could set the market actually into a downtrend. In TLT, overbought. Higher lows, higher high. It hasn't really spent too much time at the 100-day average. It's just eking out these small gains. I'd be concerned if you took out this 139, I think it's 139.12. Yeah, 139.12. If you took that out, I'd get some concern in the market that maybe it's run its course to the upside. Until it's over, though, it isn't over. So I can see what I'm concerned about, but the trend is still up. The dollar index trend is still up, higher lows, higher highs over both key averages. And to make matters even more interesting, the 18's over the 100. That's a good setup. What about embedding? Well, both numbers today were over 80, but yesterday they were not. You're not embedded. You're just overbought. I'd expect to see good resistance show up at 98.45 and a half. Eurocurrency, reaching down. I'm looking for support at the first challenge of the lower Bollinger Band. That number is 109.94. If you were to take out 110.38 and a half, I'd be concerned if I were bearish. You might be saying you want to come back to that 18-day average. The oversold light volume, that's all at play here. The British pound was a snooker today, and it's doing what I said it might do. I was hoping to see it move better, but what it's really doing is it's not following through. It's just getting stuck in the sideways black bands, the Bollinger Bands. As momentum is locked in, this market's lost its trend. Today you have an outside day up. Prior to that, you had lower highs. I don't see a trend any longer. Japanese yen, you got down to the lower Bollinger Band. This could be where I think the pros take some money off the table. So that's the first time you've hit it in a rather long time, since the beginning of the month. I think there was some money coming out of the market. I think the bears are looking back at the 18-day average, but the oversold condition probably keeps everybody away from it. In the Bitcoin, we have higher lows, higher highs. That is an interesting play too, because you've now ended the downtrend. That does not mean the market can't work lower, but I think that the shorts, with today's outside day up, threw in the towel. Been a heck of a move from over 10,000 down here, and they won't want to see if the market get under today's low. Resistance back at the 18-day average of closes. In the Brent, you can see we're rallying back up here towards the upper echelon, if you will, the differential between the two. You're back up to $6 in them. When you look at the crude, you got up to the upper Bollinger Band. That's resistance. You're in an uptrend, but at a resistance point, overbought as well. You're trying to embed in these readings, haven't yet done it. Notice how you failed today against that upper Bollinger Band. You actually had an outside day down. The trend is still up. But even if you make a run, you've got that Bollinger Band. I'm looking for resistance there. Gasoline, higher lows, had the higher highs. Each time you hit this upper band, you keep stalling out. That's what I'd expect. And you're overbought in the market. And in the nat gas, it's the never-ending bear market move right through here, but keep your eye on the red, slow stochastic line, the K line. When it gets over 20, it's probably a pretty good sign that this market's going to want to try to rally back into this resistance area. Until that occurs, no, you just still playing the bear side. I'm Ira Epstein. You have a great day. Oh, by the way, let me remind you of something. I forgot. My special metal report. I did one on the gold market, utilizing, just so you'll know, the quarterly, the monthly, the weekly, and the daily charts. In addition to that, I did the price counts. I'm doing for you as well as the seasonals, the 5, the 15, and the 30-year. I specifically talk about what to expect in gold right now. Then I take you into latter December with what I'm expecting, and then the beginning of the year. How do you get to the report? Go to our website under the keyword research. You'll see special metal report. Click on it and enjoy it. I'm Ira Epstein. I hope to see you Friday, but I'm not promising. Take care.